Growth stocks are the hidden engines of future millionaires, driving innovation, wealth, and opportunity for investors who think long-term and believe in the power of compounding. These are the shares of companies that are expanding faster than the overall market, the innovators, the disruptors, the risk-takers, changing how we live, shop, and connect. Think about companies like Amazon, Tesla, Apple, or Nvidia. All of them started small, but investors who trusted their vision early on made life-changing profits over the years. Unlike value stocks that trade based on current earnings or offer regular dividends, growth stocks are focused on reinvesting their profits into expansion. They build new products, hire top talent, and capture new markets, which helps increase the company's value over time. This means that investors don't usually earn through dividends, but through the rising price of the stock as the business grows and becomes more valuable. The real magic of growth stocks lies in compounding the ability for your investment to multiply over time as returns build on past gains. For instance, if you had invested just £1,000 in Amazon back in 2008, that same investment would be worth tens of thousands today. The key is patience, consistency, and belief in long-term growth. What makes a good growth stock? It's all about finding companies that show consistent revenue growth, innovative thinking, and a competitive advantage in their industries. They might be tech startups changing the way we use artificial intelligence, green energy firms driving sustainability, or biotech companies developing new medicines. These sectors often hold massive potential for future growth. However, it's important to remember that growth stocks also carry higher risk, because their prices depend heavily on future performance and investor confidence. They can be more volatile. Prices can swing up or down sharply depending on market trends or news. That's why successful investors don't just chase hype. They research carefully, understand company fundamentals, and diversify their portfolios to reduce risk. For new investors, one smart strategy is to start with growth-focused ETFs or mutual funds. These funds invest in multiple growth companies, giving you exposure to high-potential stocks without relying on the success of just one business. It's like holding a basket of opportunities instead of putting all your eggs in one basket. Another crucial point is to think long-term. Growth investing isn't about getting rich overnight. It's about building wealth gradually through informed decisions and patience. Many of today's millionaires didn't make their money by timing the market. They made it by staying in the market. They invested in promising companies early and allowed time to do its magic. So when prices dip, instead of panicking, they saw it as an opportunity to buy more at a lower price. Growth stocks reward investors who stay focused on the big picture rather than short-term noise. The future of business lies in innovation, from technology and renewable energy to AI and automation. And these are the fields where growth stocks thrive. As these industries continue to expand, investors who recognize their potential now are setting themselves up for significant financial rewards in the future. In short, growth stocks represent the heartbeat of modern investing. They combine vision, innovation, and opportunity in a way that no other asset class does. While they carry risks, they also offer immense potential for those willing to think ahead, do their research, and stay committed.